Good morning. Hey, we got CPI today, so we're going to start a little bit earlier. About 90 seconds. 90 seconds, baby. Let's go. CPI. Yeah. All right, it's 8. It's 8. So let's start with the poll. Hang on, I'm doing a poll. Hang on. All right, we're almost done. Ready? Let me know your thoughts on core CPI. Answer the poll. Now let me go through the routine. I just got to find where the music's coming from. Found it. No, that's not even it. Hang on, I'm trying to find where the music's coming from. There we go. All right, good morning. Please answer the poll. We got CPI today live. Consumer Price Index. Headline core revision. All super important. Oh yeah, very, very super important. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Now, Richard's saying, hey, he doesn't think core will change, but that means if it doesn't change, it goes up. I don't believe you mean it'll be 0.0. So you're like, it'll be the same as before, which is still up. So therefore, answer the question in the poll. Hey, my name is Wayne. Good to see you. CPI is important. Yeah, so right now, its importance in today's context is whether it keeps the fuel to the fire as far as the Fed cutting interest rates in September. So if inflation goes up quite a bit, even a little bit, it probably takes the Fed cut off. And now you have to wait to December. But that's not what people think is going to happen. What the street is saying is that we'll probably come out 0.2. And as Richard is saying, that is no change, but that is still up. You have to understand that 0.2 above last month's 0.2 is still higher. Prices still are higher than they were last month. But the rate of change is different. In fact, the rate of change, it's just still at 0.2. Okay, so it's better than acceleration. So there's no acceleration, if you will. So that is disinflationary. And then when you look at the models of month over month and year over year and 3-month trends and stuff, like all these things that the Fed look at, then it changes their projection moving forward. And so if there's no inflation growth, then that's disinflation, and that projects lower inflation in the future. And then the Fed's going to say, yes, we're going to hit our target, and therefore we can cut interest rates because it's too restrictive and all of this stuff. That's what's happening. But if it comes out 0.3, forget about it. Forget about it. Throw it all out the window. It's funny, isn't it? Fickle. 0.3, forget about it. 0.2, game on. The world's saved. So that's that. So it is important today. The other thing that you could look at if you want to be, if you actually want to do the research, where is the disinflation coming from? Because goods inflation has already come down. So the service side, what's coming down on the service side? And is it housing? Because remember, your house provides you a service of shelter. And the United States likes to try to calculate owner equivalent rent. Europe doesn't even do this nonsense. So if you're like, well, why is the United States at 3.1, 3.2, and Europe is at 2.6? Is Europe really that much better? No, they don't even calculate housing as inflation. The United States does, therefore it's always going to be higher. Now, I thought if we can't solve inflation and we stay persistently high, then the Fed will need to have the government calculate inflation differently and say, you know what, let's just do what Europe does. Let's throw out the owner equivalent rent. And if you do that, boom, Fed hit its target. So I'm pretty suspicious about that being a possibility, but let's see if we can hit 0.2. So today is about 0.2. That's it. That's it. If it comes out 0.1, oh my God, that'd be so good. Okay. But boy, I think 0.3 is more likely. But everybody wants 0.2. Okay. So anywho, let's get on with it. Okay. Let me go through the value chain. I like to do this every morning because I don't have a lot of time with you. So I need to show you what's important and how you grow. As a trader, you have to have good tools. You have to have good resources. As a trader, as a small business, as a professional athlete, you need a team around you. Okay? Trader's Way doesn't make money by trading against you like 90% of brokers out there. So you probably have the wrong broker if you're not using Trader's Way. Okay? The key here is you need an ECN. That's it. You need an ECN. You need an ECN. You need an ECN. Okay, go find an ECN. The one I recommend is Trader's Way, but do your own due diligence. They've earned my loyalty and respect for like a decade now. Like, dude, go check them out. Do yourself a favor. They're a critical service provider. Okay? And trust me, your small startup needs good service providers. Okay? You need training and coaching. If you are a professional athlete. Yesterday I was talking about LeBron James. All right, let's talk about him again. He's a pretty decent basketball player, huh? Yeah. Does he have coaches? Yeah. Well, why? Isn't he like one of the best players in the NBA? Hasn't he been playing for 15 years or something now? Like, he knows how to play basketball. What are you going to do? Teach him how to dribble better? Yes, he's surrounded by coaches. And he trains every day, and he trains harder than everybody else. And all the superstars in the NBA practice harder than all the other good players. You're like, Wayne, I know how to trade. I don't need investor boot camp. You're not thinking right. You don't have a winner's attitude. You need to be like professional athletes. You need to be like military precision in execution, but also strategy. Military just trains and trains and trains and trains and trains. Athletes just train, practice, 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 practice. And one of the things that we've been focusing on in the live groups, where's the live group stuff? Here's the live group stuff. It costs a little bit more money, right? But the live groups and the summer school focuses a lot on simulation. And that is literally like a professional athlete practicing, going to the gym at 6 o'clock in the morning and practicing something that they're already world-class at. Why? Because they could be world-classer. Okay? You need to be at peak performance every game. That's what Investor Bootcamp's about. Then you got to have good tools. That's QuantBox. For example, to automate your fundamental analysis. Okay? Automate your fundamental analysis, fundamentals, institutional and retail sentiment, 5-year and 20-year seasonality, technical analysis, so on and so forth. In real time. Yeah. So, yeah, you need this. Okay? Like, for example, when we go here, and I covered this today, I just finished QuantBox live stream. Here's the things you want to look at today. Right now, open up all your charts. Well, this is a screenshot from last year. But when you log into your dashboard, you're like, okay, these are the things I want to focus on today. Oh, look at this one. It's going up. It's seasonally. Oh, something's weird here. Also, look on this side. So you're neutral in euro dollar, but it's going up. So is it turning bullish, or is something weird going on holding the trend? You know, like, why is it going up if fundamentally it shouldn't be? Is that a risk? Is that an opportunity? I don't know. Go check it out. Do further research. You can open up the euro dollar page on QuantBox and try to figure out something odd is going on here. What is it? Is it an opportunity or is it a threat? Okay? And we're covering this where in about 90 seconds using QuantBox, you can have more information than at least 95% of people trading. And that should give you the edge. Okay? And then another one, here's the automation of your technical analysis. Now, I am doing massive upgrades to this, and I realized I need to put a little warning message. I am doing massive upgrades to this site right now. Massive. As you know, we're going to integrate everything I just showed you into this. This is how important this is. And so things might look different, things might be broken, things might lead you to nothing, and you click on it and you're like, what the heck is this crap? It's because we're updating everything in the back office. And you'll see pages that have like wrong logos and stuff. Well, we're in the process of a massive change. And it's probably going to take 8 weeks of extremely hard work. But I want you to know that good things are happening. So you're like, what happened to the navigation up here? You remember that? You used to have the radars and everything up here. You're like, what's happening? And you're like, oh my God. Oh my God. Wait, what? Yeah. Well, this is going to be important for what we're doing for the near future. So like there's a test product page and you're like, you click on this and it'll take you to some crappy thing. You're like, what is this? Well, it's a test. We're adding things slowly, but we're going to add so many resources to this platform that it wouldn't fit in a traditional navigation bar. And so this is all custom coding and stuff that we're doing to make all this work, because we're going to have so many resources that it requires something unique for us. Okay? 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 So anyway, so if you see something odd, that's what's going on. And things are slightly different. So you're like, this is slightly different. So here's the old nav. Okay? You see the old navigation? And then, so anyways, you're going to see a lot of things kind of out of sync, if you will. But it's only because things are getting better. So anyway, so going back to this, this is the full automation of all your technical analysis. So QuantBox has been screaming bloody murder to sell USD Rand and sell USD Mexican Peso. Or you can assume Mexican Peso because of the Rand. There's a related relationship here. Okay, on multiple time frames. So wouldn't it be interesting? Okay. Burned more than the navigation is changing. Like, dude, so hang on, bro. Anyways. Yeah. So when fundamentally and technically things line up, what do you think? Should you be interested? And of course, the answer is yes. And so right now this says up, but it's trending down. So you should be preparing for that. You understand? Okay, QuantBox is up, TRADARS says up, but the trend is down. So this is what you're looking for. QuantBox already says sell this, sell this. So now you're looking for your opportunities, lining both technicals and fundamentals up. Imagine every trade you made lined up technicals and fundamentals. Let me say that again. Imagine every trade you made aligned technical analysis with fundamental analysis. Incredible. Okay? Every trade was logical from a fundamental point of view and intelligent from a technical point of view. That's super exciting, isn't it? To have it all in one space? Well, that's happening. Yeah. Yeah. And guess what? I've been long this one for 2 weeks. Yeah. I wonder what. Cool. So anyways, that's those are all the resources. We should probably do a sonar. And here it is, American. Okay, American inflation. All right. So TRADARS here is looking at it from a 0.1, but that's not core, is it? No. That's headline. Let me just double check that on the calendar, because remember, they're different things. Month over month 0.1, core 0.2. So I care about core, but it's measuring headline. Okay, that's fine. Okay, that's fine. So we go back to non-core sonar again. Let's go back to the sonar. And we go here. All right, so less than expected. Looks like roughly 75 to 80% chance US dollar weakens. Okay? And you can pick your poison. I like to look at scalp, day trade, or swing trade. That's how I break all this down. And they look like they all exist. So if it comes out less than 0.1, 75 to 80% chance US dollar weakens. Okay, if it comes out greater than 0.1, 100% chance dollar gets strong. Holy smokes. Now remember, it's not a prediction. It's what's happened in the past. Scalp, day trade, swing. Yeah. Huh. If it comes out as expected, mixed bag. Mostly disappointment, it looks like. Dollar strength, but 2/3 of the time. So it leans a little more on dollar strength. Okay, but that's a mixed bag. All right, so anyways, so we have about 8 minutes left. Interesting. So is it going to come out that? I don't think so. But right now, Aussie's hot. So let's take a look at the scalp. And it says, okay, if you're going to trade Aussie dollar, okay, if the actual is less than 1%, 75% 2-hour chance up. If actual is greater than 0.1, 100% chance the 2-hour will be down. All right, well, let's start with better than expected. Prove it to me. Okay, there's the plan. Spike and closed high. Spike, closed high. Spike, closed high. So you can see that not only is it a scalp, but you can hold it for a couple of hours. That's interesting, huh? And if it's down, if it's greater, what happens? So there's the plan, down and then down. Yeah, drop, hold, drop, hold, drop, hold. Yeah, drop, hold. So yeah, you can see it over and over and over again, drop and hold. So you notice that they're more than a scalp. That if it's greater or less than, you have something you can hold on for a couple of hours minimum. Well, let's analyze this further because I have all the data. Let's take a look at the same trade, but over 12 hours. Okay, here's the trade plan, which is really nice. Okay, if it's less than, prove it. Oh, it's up and around over 12 hours. Up and long, up and kind of around, up and flat. Yeah, so look, these scalps lasted more than 2 hours. This is 12 hours. So like up and yeah, probably, what would you say that is, 4 hours? Up certainly for 4 hours, a little more. This one had a cray-cray drop, and then 4 hours later, up probably maybe 4. Yeah, interesting. So let's just look at the forward. So we're trying to say not only what direction, but how long does the trade last? When do you take profit? Yeah, definitely 4 hours. This one is that cray-cray one. Definitely 4 hours. Definitely 4 hours if it's to the upside. If it's greater, let's see that one. Okay, definitely down for 4 hours. 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 Definitely 4 hours. So we have direction and we have timing. Because we're going all the way back to 2023 with our analysis, looking at scenarios when inflation came out hotter than expected. So which one do you think? This is why I asked you. Do you think it's going to come out lower or higher? Okay. Yeah. And you can see if it comes out higher, okay, probably dollar strength, and you could probably get into the trade and hold it for 4 hours. In particular, if it's to the downside. But also, if it comes out less than expected, in the opposite direction, but we analyzed the 15-minute charts going 2 hours before the news and 2 hours after the news, and then again 4 hours after the news, and then again 12 hours after the news. You see how quickly I pulled up all these charts? Going back years, I can pull up 2 hours, 4 hours, 12 hours, 24 hours, 48 hours, and I can analyze, like, again, what direction, but how long do I let it run? Based on, and I have it for all these situations. Higher, lower, and expected. Absolutely, totally, phenomenally incredible information. This is like extraordinary levels of detail. Even institutional investors don't have stuff like this. This is crazy. Okay? Crazy. So you can so here's what you do. Is you pick your favorite poison. So what are we looking at? Aussie dollar? All right, so let's just do that. Whatever. Maybe you prefer euro dollar? Yeah, whatever. Just do your thing, boy. Okay. All right. And how do we want to do this? Let's do a real simple setup here. Okay. Very, very simple. And this is going to get complicated. Hang on. I have to do this one off screen. All right. So we go, let's insert some text. Where's the text? There we go. All right. So let's take some notes here. Oh, yeah. So I'm going to have to edit this. That's not going to fit. Okay. Will that fit? I guess I could have got rid of consensus, but maybe it's helpful. All right. Okay, you see the logic I'm going through here? Okay. Okay, you don't have to go through this level, but I want you to think about it. Okay, where you're picking what you want to trade, and you're preparing based on what your research or what you think is likely to happen, but also you're not just blindly reacting to some volatility. Okay, this is down. I guess it's hard to see, so why don't I move all this to the corner? Okay, is this helpful? Do you like what I'm doing? How's that? Okay. Of course, I did it on a high time frame. I didn't mean to do that. Do I have time? I don't have time. All right. Okay, what do you think about that? Okay, did it come out less than? Okay, so I'm going to drop this into a smaller time frame, and you have the choice of buying any retracement and then holding it for 4 hours. Yeah, it's the core. That's what we wanted to see, right, Big Perm? So the Fed's going to cut interest rates, the stock market's going to rally, dollar's going to weaken. All super easy. This is what I cover all day, every day. The thing is, okay, remember, we've analyzed this volatility going out 4 hours. What we analyzed was this 15-minute chart usually is a big green candle in this situation. What you don't see is what happens inside that 15 minutes. Because if it drops down to here and you buy it, and then it goes up for 4 hours, well, then this candle's going to stay green. And it usually is green, 15-minute candles, or red, in the opposite situation. So you have to trade inside of the wicks. And I cover this at Investor Bootcamp quite a bit. So, if there's a pullback, your decision right now is, do you buy somewhere inside this 382-618 buy zone? And we haven't seen a situation of, does it come all the way back and collapse? Now, one of them came all the way back and then rallied up, but not reversed. So this is what you should be doing over the next 10 minutes, is knowing that we've analyzed the behavior going back years in this situation, and we've seen past performance. Now, does it predict what's going to happen here? No, but you do know what the past has produced, and so it should give you a level of aggression of trying to get in. Perm says it's long and gone. No, it can't be long and gone because we've analyzed it for 4 hours. It goes up for 4 hours. How could it be long and gone after 1 minute? Oh, missed it. Is that what's happened in the past? That's not what's happened in the past. So now you got to figure out, well, what is it that you do want to do? What is your game plan? What is your tactics? If your strategy is set, get in or buy the dip. great. Then what dip at what price, what moving average, what time frame. But the thing is, you know what to not do. Okay? Okay, so now are you preparing? You got to be tactical now. Strategy I've already done for you. Okay? So I'm playing it off core. I don't really, see, remember I said it was about core. So I'll just edit this slightly to make it more about what I was interested. If core, okay, not headline, if core is less than 0.2 is what I said. Even 0.2 would be good. Okay. Okay, there we go. So this is what you're playing. Okay. Oh, yeah, nobody's talking about July. July is a dead month. Okay, is it going to happen for you? Is it going to kick off the pivots? Have you made a decision? Have you put in limit orders? Have you done anything? Are you doing anything? For example, that would be one way to play it. You know, for fun, we can play around with this. Let's drop this to 0.3. And this one's still a 10. .3. Have you thought about something like that? Instead of one lot, you spread your lot in thirds. The thing is, what I'm trying to get to is like, that's not necessarily the right thing. I just want to know, are you actually doing something? Are you actually thinking? Are you actually responding? You have data, you have direction, you have time frame. What are you doing? Okay? So I don't know the future. I always have to make decisions just like everybody else. But I think newer traders or amateurs, they just freeze up. You know? I'm like, well, have you thought about it? Okay, I'm just, I'm enticing you to think about it. So is that the right thing? No, there's a million ways to trade this. But standing still is not the right thing. My football coach used to tell me, if you stand still, you get hurt. Somebody's going to knock your block off. Okay? We're using like the military analogy, right? If you stay in the foxhole, you die. So anyways, TRADARS updated itself. I'll drag this back. It removed all other scenarios. You see, all the other scenarios are gone. And all there is this one. Now, euro dollar has a higher probability. I picked Aussie dollar just randomly. Okay. And we go here and it's, okay. And, right. And it's showing us past performance. Does it predict future results? No. Up for 4 hours. This first candle is a 15-minute candle. So somebody said, I think I might have missed it. What are you talking about? I think I might have missed it. What are you talking about? Here's the dip type thing. And then extend. But notice that what you don't know, it's like, look, the plan that I just did for you, right, where I put limit orders down, you don't know if they occurred on this candle because you're like, Wayne, I have to buy a higher high. No, you don't, because you can't see inside that candle, because in the order of 15 minutes, you don't know if it went up or down. You just know it closed high. So what you need to anticipate is if it gives you a pullback inside the first 15 minutes, you got to grab it. That shows you the scalp. So like you don't know if it dropped 50% and then closed at 100. You don't know if it dropped 50% and closed at 100. You don't know if it dropped 50% and closed at 100. But if you're trading along, you know you need to act within that 15-minute candle. You see the level of intelligence that you have? This incredible amount of data. Okay. Incredible. Right? And so now in the first 15 minutes, you have this strategy of if it drops, you need to be aggressive enough to buy it because you believe it's going to go up for 4 hours. So maybe up to here. The other thing is you also know, okay, again, let me bring this back just to make sure. You also know that after the first 15-minute candle, it still went up. Okay? After the first 15-minute candle, it still went up. After the first 15-minute candle, it still went up. This might be that little 382, right? Okay, cool. So now you also have a second strategy, the trap and break. Okay? If it goes above that, it'll go up now much more slowly, but maybe you get to here. Okay, so you have two strategies going on, right? The pullback, oops, that's in white. Let's do pink. Okay, strategy number one is you buy a pullback in the first 15 minutes. If it's not in the first 15 minutes, you probably want to have a much more, because we saw that one where it went up and then it dropped for like 2 hours and then went up. So you might say, okay, if it falls after, you might want to take a walk. But the first one is that. Okay. The second one is, what will you do if it breaches that line? When will you act? I want you to think about that now. Now, if it breaches higher, what are you going to do to act? Okay? Don't react. Be smarter than average. Or be smarter than below average, right? What is it that is going to trigger you? When do you get into the game? Okay? Like, are you, all right? So, look, we've already missed a 382 or almost a 382. Okay? I might have analyzed it slightly wrong. Look, I'm trying to coach and do all this at the same time, right? Let's see. Yeah, it's pretty gosh darn close to a 382. I should have had my order here. But anyway, so now what? Now what are you going to do? Well, now what are you going to do? Nobody understands Supercore, Sky Killer. I know we talk about it and I've taught about it, but is the vast majority of market participants that smart? No. All right, cool. So look, there, the 382 is there. Now what are you going to do? Okay. Do you see how crazy important this information is? This is just one tiny tool inside of TRADARS. Just one. But it's massive if you think of the data that's sitting in the database. That we have this on all time frames going back years, and we can just quickly bring it up and see direction and see time duration. Yeah. Oh, the ends. Oh, I got knocked out. Yeah, that's interesting. I got knocked out and then put back in. Yeah, let me check the ends. Yeah, hang on. Oh, intervention too. Intervention. That's got to be intervention. So not only did I get knocked out for profit, but I bought some of these like 500 or 600 pips. Yeah. Holy smokes, intervention. Oh, they're so brutal to do it now. They're bastards. Yeah. Oh, I see. Look at pound yen. Oh. Oh, they went exactly on top of the R2. Annual R2. Oh, those. So, dude, these guys are brutal, huh? Yeah. Dollar weakness. Wowzer. Oh, right. So I got some orders in on some of these still. Buy. I got those. Buy limit there. Where are they? Did I take them out? All right. So let me try to find something here. I thought maybe I took them out. I had buy orders very significantly below price in anticipation of a pullback. Maybe I didn't do it on this account. Interesting. All right. So we were at 75.5. It only dropped to 72.5. I would have had them like down in here. But you could, I don't know how long this is going to last. So that's not great intervention, but I'll tell you what I've said in the past. The second intervention is always weaker than the first. So if the first one dropped like 800 pips, the second one drops 500 pips, and the third one drops 300 pips. Okay. Now, the sad thing is I got to go soon. I have a Fed meeting. I have my 5th Fed meeting. I did one in May. No, two in May. Then I went to the St. Louis Fed in June and did 2 days there in person. And now this is the July closing meeting, the most important one, the whole reason I really want to be part of this program. And I'm shocked. There's only like 12 of us in this program. I'm like, it's weird. I thought there'd be hundreds. So my flight was a little bit late when I got to St. Louis. So I went to security and nobody was there. I thought there'd be signs and lines. There's no signs. I'm like, there's no signs. So anyway, so I get into security. I'm like, yeah, I'm here for some sort of and I explain. And they're like, oh yeah, I think we heard of that. So they make a phone call and somebody comes down, because I'm like an hour late. Okay, cool. And she just shows up. She's like, hey. And I'm like, hey. And she's like, yeah, I'm the liaison of some sort. And I'm like, okay, great. which I think is a fancy term for intern. But anyways, she was on the marketing side of this thing. Okay, great. So great. She walks me through and she gives me a tour of the Fed, and I'm like, that's really cool. And, she's like, we have a Starbucks. By the way, it wasn't a Starbucks. I guess Starbucks in St. Louis means coffee shop. But anyway, so I get the little tour and she walks me to the room, and I'm like, I'm all prepared, right? Like, I'm going to sneak in on the back and nobody's going to see. I walk in, there's like 12 people in the room plus the speakers, and I walk in and everyone turns around and looks at me. Who's that? Why are you late? I'm like, oh my God. Right? So anyways, yeah, interesting. So today's the wrap up. Yeah, so which sucks for me because I'm so interested in some of this stuff. But they intervened, and probably because of the weak dollar. So they're really doing the intervention on the dollar yen. Oh, those sneaky BOJ guys, huh? That's sneaky. And boy, that is so incredible on the pound yen. It's just insanely incredible. So that's the thing. So I got to go to this Fed meeting, but I want to buy some of this stuff. Wowzer. Oh, brutal. It's brutal. Okay, go back to the Aussie. How's it going here? Yeah, that's what our research showed. Are we still inside the first 15? Yeah, no, it's closed. 15-minute candle closed. We've seen this before. Okay. So anyways, holy smokes, what an interesting day. Holy smokes. BOJ intervened on us with a weak dollar. They're like, that's it. That's it. So they were sitting there, finger on the trigger. It's like 8 o'clock at night in Japan. David's like, that trader's analysis was literally money. It's good data, even if it's not money, right? The level of detail that we had for time and price, really, and vol. If that's all it did, I think it would be worth $79 a month. If that's all TRADARS was. Yeah. If that's all there was, that's worth it. Yeah. And unfortunately, coaching and all that kind of stuff, while the market's moving and, I got my eyeballs all over the place, I didn't quite draw my fib correctly. Where was that chart? What did I do? This one. At the time, let me go back to the 1 minute. Remember how I drew it? Like, I didn't update it. So my entry was, just above, I think, oh, come on. My entry was like this. Remember that? Yeah. And it should have been off the high candle. So it should have been maybe about here. And I don't even know if that would have hit it. So it came down pretty close. And you know what else is interesting? I'm not using a 3A2. Remember that. I'm trying to teach you that buying pullbacks is smart, but if you believe buying a pullback is a good idea because of how the skin on a sea star grows, or how a cherry tree blossoms, or the outer core of a pineapple, and you're like, oh, because it's got the golden ratio. That is so stupid. It's beyond belief. But you do want to buy a dip, bro. So the way that I have it set up, and it's kind of good to note here. Oh, and look, that worked. If you do it off the first candle. what I do, okay, and I don't know if David's heard this speech because, we used to teach 382, 50%, 618. Now I'm like, dude, 1/3, 1/2, 2/3. If that's all you did in your life, you'd be perfectly fine as a trader. And no golden ratio, and it has nothing to do with how a pineapple grows. Okay. But I would, if I had done this off the candle, and I guess that's my bad as well, we would have had this set up like this. Entries just above, because remember, when you buy, you have to also cover your spread. So you have to have it up. It has to come down and hit the 66, but the spread would hit here, so your entry would be just above the 66, just above the 33. And if I had done it, let's say, a little bit better, being a little sloppy, I guess today hurt, but we could have caught this. Coulda, shoulda, woulda, but whatever. I just wanted to show you the... I wanted you to be prepared, more than 95% of market participants. 2, I wanted to coach you into being aggressive as to doing something. Okay? And then 3, just showing you some sort of technique. Okay? Nowhere in here did I say sell, right? So anyways. Yeah. Oh, and Denise did catch it. Yeah, better job than me. Thank you. So anyways, I got to roll because, I got to go do some nerdy things. I got to go ruffle the feathers of some government employees. I'm telling you, they do not like me. Yeah. But the other economists do, actually. I think I probably ruffle half of them. But the other half, one guy, came up and wanted to talk about Forex and stuff like that, which is really cool. But anyways, I got to roll, got to go do some nerdy stuff and geek out on economics. And like I said, today we are getting really, really, really knee deep into the weeds on the new processes that the Fed is now using to handle things like monetary policy. So if you remember, like the reserve requirement ratio and all that kind of stuff, they don't do that anymore. So you're like, well, WTF, how do you run the show now? And they don't do quantitative easing anymore because they believe it's failed, or at least they haven't outwardly admitted it. But if they're not doing QE anymore, and they're not doing the RRR anymore, then, well, what the hell are they doing over there at the Fed? Well, that's what they're going to cover in gross detail today. And so if you don't understand all of that stuff I just said, don't worry, because I do. And second of all, I'm going to learn on your behalf. And then 3, as your professional consultant, meaning if you subscribe to Investor Bootcamp and pay money, guess what? You're paying me to know this crap, and so I can tell you. Well, that's cool, because as a small institutional investor, you need to have coaches and consultants. Performance coaches to keep you in the top of your game, and consultants to make sure you know what your competitors don't know. It's that simple. So this, like I said, for 5 days now, I'm learning so that I can share with you. That's a hell of a commitment, huh? Yeah. So thank you for being on my team. Peace on earth. May the pips be with you. May your profits be above average. Oh, be careful today. Cheers.